tight areas are basically a sign of equilibrium in the stock's price, where there's a lack of sellers, all the selling is being absorbed. And you can see this subtle tight area here that the top traders will pick up on, but most traders will kind of miss these two tight days. This RMV, relative measured volatility, helps you spot these tight areas really easily. In DeepView, we have some presets created using RMV in screens that look for stocks with low RMV. This point, which RMV highlights for you, even if you know nothing about trading, is the same thing that the US investing champion of that year was looking for. A lot of people have trouble identifying the key level, the key pivot up the right-hand side of the base. This is a really nice way to do that. Wait for RMV on a weekly or daily to go to zero, and then look for significant highs. Hey everyone, how's it going? Welcome back to another video. And this is going to be a pretty special one. It has to do with a research project that's been the result of both my own trading experience as well as my interviews with many top traders, market wizards, hedge fund managers, such as Mark Minervini, Oliver Kell, Jim Ropel, Charles Harris, many stellar traders who I've gotten a chance to talk to. And it's because I've noticed a similarity in, regardless of their time frame or trading style, really, whether they're swing trader, position trader, I notice a similarity that many of them share, and that's that they all look for a particular price and volume characteristic that is shared among many of the stocks that they decide to trade, and often leads to pretty much the signal that tells them, hey, this would be a really good low risk, potentially high reward entry point that you can use to ride those particular stocks. So this is going to be a really good one, and that price and volume characteristic that I'm going to talk about today and show you guys how to find and trade is basically a tight area on a chart with ideally corresponding volume, although in reality, it's really that price tightness that is the absolute key. And this price tightness is really important because of two main reasons. The first, for these top traders and also my own experience, is that this price tightness that occurs at the bottom of bases or even during a stock's trend is a additional characteristic, a sign of significant accumulation during that base or during that trend, likely from big institutions, which really create the trends that we see in the market. So that's kind of the first main reason that this price tightness is so key. And the second reason is that, as I mentioned, these tight areas often provide an excellent low risk, high reward entry point because you can manage risk really easily at the low of the range, the low of the tight area. And these tight areas, as you can see in this chart of DOCU, which is one of the examples that we're going to go into, these tight areas, whether it's on a daily chart or on a higher time frame, forming a base really on a weekly chart, these tight areas lead to price expansions that we can take advantage of as traders. So they often offer really good entry points, low risk entry points that aren't obvious to most market participants and get you in a lot earlier than, standard entries based on base breakouts or, larger patterns like cup and handles. These entry points are just a little bit, less obvious to most people, and therefore they're more likely to present the best, opportunities for the risk that you want to use. So today in this video, we're going to talk about these tight areas, but more importantly, how to find them consistently, even if you don't have, the stellar eye that these traders have developed over time, trading for, 10, 20 years of these opportunities. So we'll talk about an indicator that we've included in DeepView that makes it really easy to spot these areas, and not only spot these areas when you're analyzing a chart as we're doing right now, but also screen for charts that are presenting opportunities just like this back in this area with DocuSign. And we're going to go through a lot of examples, a lot of current examples that have to do with, recent themes, AI, semiconductors as well, the crypto trade as well as going to some historical examples. We've got Tesla from 2020, which is kind of an iconic example of tight areas leading to great entry points and a significant sign that a stock has really good potential, even very early on in its move. So this is going to be a really good one. And this is brought to you by DeepView. This indicator that we'll be talking about is only found in DeepView, and this is basically a formulation that I've created after, as I mentioned, many years of testing. And this RMV, relative measured volatility, helps you spot these tight areas really, really easily. And as I mentioned, also, it's completely screenable. So you can find these characteristics, these very tight areas where this value, this relative measured volatility gets so low that it identifies these tight areas on the charts. So there's gonna be a really good one. And if you are interested in trying DeepView, seeing this for yourself, how this works, we are offering an additional 20% off just for the next few weeks using the code RMV at checkout. So if you click the link down below the description or visit the site deepview.com and enter the promo code RMV, you can get an additional 20% off your purchase. So definitely check that out if you're interested in. This is my daily driver for screening, charting the works. And we've built so many very cool things into this ecosystem that really makes it the ideal trading platform for both swing and position traders who focus on growth stocks, especially CAN-SLIM traders. You've got earnings, sales, growth data right here. Everything is customizable. You've got all these columns that are sortable, and there's just so much to offer. So highly recommend checking this out, checking out the website for more details or some of my previous videos. So with that said, let's take a step back and again talk about what these areas represent on the charts, why they're so meaningful, and how this indicator, identifies them. So first, the tight areas are basically a sign of equilibrium in the stock's price, where there's a lack of sellers. All the selling is being absorbed by market participants who are accumulating, and that accumulation is what creates price expansions from these tight areas. So it's really an element of market structure that stocks move from trends, go sideways, and then expand upwards or downwards, go sideways again, form ranges, expand upwards or downwards. And once an uptrend begins, we start to see ranges, expansion upwards, ranges, expansion upwards, ranges, expansion upwards. And these opportunities, these ranges that form are basically the entry points, the potential entry points as the stock moves out from them that can allow us to catch on to an expansion upwards and make a profit. And of course, you can also profit to the downside from these tight areas. If you're into shorting, that's definitely a possibility. But the key thing is that these tight areas represent an equilibrium in basically sellers and buyers. And then we wait to see how that equilibrium gets resolved. And of course, during an uptrend, it often gets resolved to the upside as demand overwhelms any supply that's left. So these tight areas become kind of springboards as stocks move sideways and get compressed. You can think of it as a spring that once that energy is unleashed, it gets pushed dramatically to the upside or downside, and often in the direction of the trend, which is why we want to focus on these so much. So just looking at this example of DocuSign, as I mentioned, we'll go through a lot of examples. I've highlighted these pink areas, these ranges, and we'll talk about how RMV works to help identify them as well. But you can see a range form here, expansion upwards. It tightens again, gets really tight, these 4 bars, expands upwards, gets tight for just a few days, expands upwards. We get earnings in there as well, continues that expansion upwards, forms a much more subtle tight area. And this is where the indicator that I'll talk about today really shines. It really helps you identify the subtle tight areas that most people wouldn't pick up on. And then again, we get some expansion upwards. Then we form a range, see expansion to the downside. We form a range, expand to the upside. So again, it's very important that from these tight areas, we don't necessarily always get continuation of the trend. It is more likely when we're trending above the moving averages, but eventually every stock loses steam and needs a longer consolidation period, whether that's a new base or just a pullback to the key moving averages before it's ready to continue an uptrend if it is going to do so. And here we see some selling come in. We see that range, that tightness for really 5 bars, 3 bars, really tight, expansion upwards. Then we get tight for really 2 weeks here and break below the moving averages, break below this range that forms, see some rapid expansion to the downside before, again, we start to see that equilibrium show up again and see that price tightness, that range form here. We break down a little bit, form a little bit of tightness here, and then expand back up to the upside and move back up. And we're starting to come down in the RMV and form another range. So let's now talk about RMV in particular and how it can help identify these tight areas. So what is RMV? And let me actually go ahead and hide volume here. RMV stands for relative measured volatility. And what it basically identifies is it looks back when you're on a current bar and looks at the recent range and looks back a certain time period and compares the volatility within that range to the general volatility of that look back period. Here, if we take a look at the settings of RMV, it's looking back 15 bars. So this indicator right now is looking back at the general volatility in terms of the ranges that form of the past 15 bars or so, and determines for this instant, how does the recent volatility compare to that general volatility. And it gives a relative measure from a score of 100, which means expansion, high volatility, to contraction, which is measured as close to zero as possible. So the closer to 100 that you get, the more expansion you're experiencing in that moment. You can see on this expansion bar upwards, we rapidly see it get up to 100. Then during this range here, where it gets really tight for these 4 days, the last 2 days here, RMV, if I click out here, RMV was 0 and then 1, very, very close to 0, about as tight as you can get looking back during this period. And you see it again, as it gets tight here, we see RMV drop quickly to 0. It's a very precise and sensitive indicator. So even short-term patterns like this will trigger it. And that's where this indicator really shines, is that it helps you identify these subtle tight areas that most traders won't pick up on, but you'll be able to do that using this indicator. For instance, I didn't plan to show this stock, but I think this is a good example. Dexcom is a recent name that pushed up really nicely. And you can see this subtle tight area here that the top traders will pick up on, but most traders will kind of miss these 2 tight days. And RMV was a do right here. We drop all the way down to 3.58, very, very low. And just in general, I've got these kind of ranges set. Anything under kind of 30, I view as getting pretty tight. Anything under 15 is getting very, very tight. And then anything under 5 and of course close to 0 is about as tight as you can get. So you can see here, we're forming a range here. We oscillate in between, going up to around 20, going back to tight during this range. But as we expand up and then get tight for just these 2 days, the RMV really highlights that for you. So I think that's another good example that's worth mentioning. So that is basically what RMV does. What does it tell you? It tells you how relatively tight the recent price action is. And the tighter it is, the more likely there is a range where you can draw a pivot through these highs, which can be an actionable signal to the upside and lead to dramatic moves as we see here in DocuSign. But of course, I do want to remind you guys that from tight areas, we can also see expansion to the downside. There's no magic pattern. All we're looking for is high probability edges, setups, and entry tactics that allow us to take advantage of high potential stocks at points where we can manage risk really tightly. Here you can, if you're buying through these highs, you can manage risk right at these lows, which if we take a look, let's see what that risk would be, just about to say 3%. So that is extremely good risk reward. You've got the downtrend changing from an uptrend. We have the first range that forms expands up. We see a back test of the moving averages, a nice sign of confluence here. We see RMV go to 0, a very tight range form. And then if we bought it through this pivot, we can take advantage of the new uptrend that forms above the moving averages. So again, we're just trying to play probabilities, and RMV is a tool that can help you find those tight areas that in the context of a larger pattern can be a very powerful entry tactic and edge for you when you're trying to trade momentum stocks, growth stocks, stocks that can really make moves quickly. So also I do want to mention, as I kind of said in this example, this is most effective up the right-hand side of a base as a stock is transitioning from basing or a downtrend to a new uptrend, and then kind of the next few pullbacks to moving averages. You don't, like anything, this isn't quite as effective after stock's already made, a large move in a quick amount of time, hasn't had a lot of pullback, basing. This works best up the right-hand side of a base shortly after the base breakout if we do get another pullback. And then, the first pullback to the 10 EMA, the 20 EMA, 50 SMA, if we see a range form there, here we see a range form right against the 20 EMA, then that can be another kind of add-on buy, or, the start of a new swing trade if that's more your style. Sell it as it breaks a 10 EMA, look to buy back at the next range against a 20 EMA, swing trade, buy through these highs, pushes higher, sell as it just kind of loses momentum here and doesn't resume to the upside. So that's kind of the general strategy, and also the particular entry tactics that you want to use with RMV and trading these tight areas. Let's now go through a bunch more examples. And one more really cool thing in DeepView is not only do we have the indicator here, which as I mentioned, as it gets close to 100, we're seeing expansion. As it drops significantly, we're seeing tightening. Here we've got SOUN, a recent AI name that's been acting really, really well, really tightened up after this gap up. I believe there is some NVIDIA partnership news, and then we can just see it get tighter and tighter and really get accumulated in here. That's what RMV is telling you as well. This gets all the way down to 3.16. After this expansion upwards, gets very tight, and then explodes to the upside, pulls back below 10 EMA, gets tight for 2 days again. RMV helps identify that, pushes higher a little bit, gets tight for these 3 days, and that leads to another viable opportunity here as we expand upwards from this level all the way up, 60%. Obviously, this is a more higher volatility name, but this helps identify those subtle tight areas that most people wouldn't pick up on, but you can using RMV. And what's cool in DeepView is not only do we have the indicator here, but we also in the DeepView technical patterns indicator, which you can find by clicking indicators, typing in DeepV, and going down and selecting this, you can load it up, is you can also, if I turn this on, identify on the charts through this green dot here, or however you want to set it up, areas where RMV gets very low, to suit your preferences. So if we click settings here, I've got RMV selected here. I have it set up to show a dot when RMV gets less than 8, looking back 15 days. You can change this value, and this value, if you want to be more selective, say only under 5, you could do that as well. That will show less signals. I like 8 just because I prefer to see more signals and kind of interpret it for myself through my chart eye, but you can definitely alter these settings to suit your need. And then of course, we've got it shown up as a green dot, so we can press OK. And now you can see right here, the day before the breakout, and this often happens, we get the signal that it's getting really, really tight. We don't know this is going to happen, but the probabilities are higher when we're seeing this RMV come down. We've got already basically evidence that we're seeing significant accumulation with the gap up, tightening in price. RMV highlights that for us, and then it's buyable through this high, in this expansion upwards. And then again, the stock pulls back, starts to tighten for 2 days. We get the signal again. You could set a pivot right here, and let's actually do that just to show you guys at these highs, the high of the range that it forms. So once you see this signal here with the green dot, or with the indicator getting below a certain number, you can then look to find a significant high that kind of defines that range. So what does that mean? Let's do it again for this example. We see RMV, showing that green dot, which obviously you can change. We're looking for significant highs. This high is about the same as this high as well. So we'll go ahead and draw that pivot, and that would be kind of your entry point if the stock starts breaking through that range, which it does the next day for a swing trade or position trade, however you want to handle it. So that's basically the DeepView technical patterns element of it. It's another way to help identify the signal on the chart. So if you don't want to take up chart space, you can just use the DeepView technical patterns to highlight low RMV, really tight areas just with that signal there. So that's another example there for you. And of course, you can just turn it off if you'd like to. And I prefer to have RMV itself on the charts, just below my charts and my volume. That's kind of my setup, just because I do like to see the visual, confirmation of the expansion as well as the contraction, because sometimes you're seeing tightening in the chart, and then RMV also is coming down, confirming that. And just seeing the RMV come down tells you that there's a range building in that moment. So let's go through a bunch more examples from this year. So again, Bros was in a downtrend below the moving averages, starts to form out this base. We're seeing tightness here. RMV, basically under 5 during this area. You can see how tight it was here, and we can turn that on again. RMV is highlighted right in this area. So this is a key signal, not just for a buyable setup, but during the bottom of bases. If you're looking even at stock in this area and you see during the base that there was price tightness, that again is suggesting that there's accumulation going on, which could mean that the stock has more potential. And this one has had a really nice move off the bottom of this base. So looking again, we're seeing the transition from a downtrend to sideways. We're starting to build higher lows. We're seeing tightness again in here. You can see RMV come down to 0 or near 0. We see tightness for 4 straight bars. We've got earnings, which kind of adds volatility. And then we start moving up. We tighten up again. You can see RMV falling dramatically, expand upwards from that tight area. Then we get really tight within this flag. You can see RMV coming down below 15, below 20. And then once again, we get expansion up from that tight area. So what does RMV do? It helps identify these tight areas for you, which then you can go ahead and, draw in your flag or draw in your sideways pivot, however you want to handle it, however you like to trade it. And again, the benefit, as I'll show you guys in just a bit, is you don't have to be looking and trying to find this manually on your charts. You can use this indicator to screen, on this day, looking at stocks under 20 or whatever it is RMV. You can go through all those names, find those tight areas, find the best setups in the best themes and groups, and use this as a hack to help you find those high potential, low risk opportunities. So from here, we get expansion, and now we're tightening again. And yep, there it is. RMV going close to under 5, it looks like, as we start to tighten here after this expansion. Again, lower in within the base or up the right hand side, or after a more significant pullback to the 10 EMA, 20 EMA, that's preferred to see a tight area. Here we're kind of up in nowhere. So even though RMV is coming down, it's not quite as high potential as this flag, or this flag, which happened against the 10 EMA, or even back here where it happened against the 20 EMA and 10 EMA as we're making that transition from downtrend to uptrend. So NVIDIA, this of course has been the AI leader here, and you can see right in this area we get really tight just before it broke out. We did pull back and then tighten up again, which we see in RMV as we tighten up right before the move upwards. But this accumulation, this tight area, tells you that there's not many sellers left. And in this case, we did need kind of one last contraction of much less than 10%, which is pretty small at the end of a base, to shake out the last batch of sellers before we could get this breakout. And super strong move, from the beginning of January this year on, during the next few weeks, as we've seen. And what I want to highlight with NVIDIA here is that RMV isn't just for daily charts to find more subtle kind of entry points. Especially if you're more of a position trader, investor, you've got a longer term time frame, you're not really looking for these short term ranges that it can highlight. You can see here again under 5, pulling back into the 10 EMA area. You could buy that push up off the moving average. If you're more of a longer term trender, you've got a longer time frame, you can 100% go to the weekly chart and look for those same characteristics. You can see how tight it got these last 3 weeks. RMV going to 0. You can switch up the RMV look back period from 15 to more like 5. I think that's a little bit better for a weekly time frame because you're getting more information. You could go 5 or even 10. So just bring that down a little bit, and you can see the tightness that RMV is highlighting right here. You can see it visually in the charts. And if we bring back the technical patterns, we also highlight, of course, the RMV, the last 3 bars here. You can see that with the green dot, but also this corresponds with a 3 weeks tight, which is highlighted in orange here. You can see I've got 3 weeks tight. That plots basically those bars in orange. So this is definitely usable on the weekly chart. You can see we're just seeing RMV come down. We've kind of pulled back the last 3 weeks, but we're still extended from that 10 EMA, the 10 EMA on the weekly. So it's not quite as prime a setup as we had right here, where we are compressing against that 10 EMA here. So Again, this is how you can use it on a weekly chart. If we scroll back in time, let's take a look earlier this year. We had the higher lows start to form. We're seeing the stock transition from a downtrend to sideways to moving up. Then what do we see here? We're seeing a 3 weeks tight, and it's being highlighted in RMV. So what can we do? We can highlight the pivot of this level, which there's kind of two. There's the one at these highs here. But if we take a look at the structure, these highs are at a similar level, and the stock hasn't managed to close above this high here. So this is the more subtle buy point, which can get you in a little bit earlier on the weekly here than if you use this pivot. But regardless, we're looking for these ranges to form where we can draw pivots and basically look to play the expansion from the contraction that's highlighted in RMV. So that's pretty much it with NVIDIA in terms of what I wanted to highlight. You can both use it on a weekly as well as a daily chart. CLSK, this has been a crypto high flyer this year. Again, looking at this base, we're seeing a downtrend. Then we're seeing a range start to form. RMV goes to 0 at the bottom of this base. Again, showing that accumulation, showing that transition from expansion downwards to more sideways. We see a push up. Then what do we see again? We've kind of seen this play out again. We're seeing a range form sideways, RMV coming down into the consolidation area under 30, even getting, under 15 here, tightness. And then what do we see? Expansion to the upside again. And what I really wanted to highlight here is this subtle buy point. Let's even hide the expansion bar that showed up. And all the crypto names, we'll go over coin in just a second, showed this at the same time. After this expansion up, we see the stock tightening again. It gets tight, tight, tight. We get an inside bar here. And what is RMV right here in this case? It's hidden a little bit here. But looking at that value, it's right at 3.85, extremely tight. And again, this is screenable. So you'd be able on this day, if you just looked for stocks with RMV under 5, you could even add a condition within 3% of the 10 EMA. Again, I said I love and prefer these setups that occur near the moving averages. You could run that screen and this would show up. And you could see if it meets your conditions for an entry. This would be an ideal kind of swing trade type setup. Continuation up. We've broken through the base. Now we've pulled back, tightened up, and looking to play the expansion to the upside, which led to, I think, a 30% move in just a matter of 2 days. And then, of course, it broke down. But again, we're looking for those opportunities that can lead to high potential moves like this. And then once you're at a profit, you can decide how to play it. Likely, if you're more of a position trader or swing trader, you're stopped out, through this low here as we broke down, if not after we broke down from this gap up. So that's another good example. It pulls back, forms a range again. RMV comes to 0. We see more expansion upwards, not quite as successful as this move, but you can see that same kind of pattern play out. Pull back to the moving average, range form, and then expansion up. DOCU, as we went through already, I think is a great kind of textbook to study in terms of these ranges and contractions. I won't go through everything because we already did, but you can see how these ranges form as RMV highlights them. We see expansion upwards or downwards to the upside. This, to me, is kind of the ideal entry for this name. We see RMV right at 0, expansion upwards. We get a retest of the high of that range, but then we find we basically never challenge the low of this range here. It gets picked up at the moving averages, which you can use to trail your stops, and leads basically to a great expansion upwards in the next few weeks. SMCI, another high flyer from this year. This RMV could have been used to highlight a pretty subtle but pretty strong buy point after the initial breakout. So say you miss this breakout, what are you waiting for? You're waiting for a pullback. You're waiting for a range to form, a spot where you can manage risk against. And we start to see a range form here. RMV goes down all the way to 0 right at this point. So what do? We look to draw a pivot at a key level, these two highs. That basically is triggered the next day. And this would have been a pretty strong entry point, managing risk at this swing low, which is a little bit higher stop here than before, just because SMCI is so volatile. But it highlights that tightness relative to the overall price move, which would have been a pretty good swing trade entry to sell into strength. Or if you bought your initial position here, you're looking for an add-on buy to add more. this could have been a really nice add to that general position to ride this resulting trend. Bitcoin, of course, has been another recent trend that's been very strong, and IBIT, the ETF, this is another great example of RMV in, at work, highlighting those great low risk entry points. So here we have, the start of it. Then we push up, form higher low, form this really clear range. We see RMV go down to 0 here. What can we do? We can highlight that pivot, draw that across, and there we go. There's our buy point. We see another expansion upwards, another range forming as RMV gets close to 0 and stays below 30 here. And what can we do? We can draw in that flag and look for the next buy point. And again, this one kind of happens at the turn, the start of the move up the right-hand side of the base. And this is kind of the next one, which happens right against the 10 EMA, pretty low risk. Again, if you're using this buy point, this would have been only about 3-4% risk, pretty good risk reward there. And it's, led to a really nice move. Up here, we're seeing it tighten up a little bit, but it's a little bit extended from the 20 EMA. It's not close to the 10 EMA. It's not kind of that same look to it. So even if RMV is low, you always want to consider the overall context and pattern of what the chart looks like. Looking at Coinbase, this is another really good example of it highlighting tightness within this base. You can see it get all the way down to 1.46 right here, highlighting the tightness at the bottom of the base. Again, here we have tightness as it gets rejected from the moving average. It doesn't pull back too hard. We see a little bit of tightening here as it drops here. And let's actually see, because of this tightness really stands out to me, let's see on the weekly chart if it helps us as well. So let's auto fit there. Yeah, there we go. So we've got very nice tightening, RMV going to 0 at the bottom of the space. Again, you could look for stocks with RMV 0 and just try to find these weekly signals as well. Even during this previous base, which I want to highlight as well in just a second, we're seeing RMV go to 0 here. It's the tightest it's ever been right before we have one more pullback and then the start of this trend upwards. And that happens a lot. Here, as we transition from a downtrend to sideways, we're seeing again RMV go to 0. And for weekly, as I mentioned, you might want to go a little bit lower. Let's change this to 5. And there you go. It gets really tight here, really tight here, really tight here when we're already trending. And then, as I mentioned before, these tight bars where you can then go ahead and draw through these highs. And there's your buy point to ride up the right-hand side of a base. So a lot of people have trouble, identifying the key level, the key pivot up the right-hand side of a base. This is a really nice way to do that. Wait for RMV on a weekly or daily to go to 0, and then look for significant highs recently that make sense, that the stock's been forming a range under, and that becomes your pivot. And you can see again, RMV going to 0, but this is a little bit extended from the moving averages. It's not at that nice turn, which we like to catch. So let's go back to a daily chart here. What I really want to highlight, and you can see the pivot here that we highlighted, is this follow-on buy point here, which RMV really highlights nicely for you. RMV going to 0. And right now we're a little bit too sensitive for a daily chart. I like 10 or 15. Let's go back to 10 here. You can see RMV going to 0 right during these 3 bars. What do? We go ahead and look to draw that pivot. And then there's our buy point through this point, expansion upwards, really nice action. And even you've got a follow-on range here that forms, RMV going under 5. And then we see another expansion upwards during this trend. So really caught this very subtle entry point that most people would not see, but it's a nice low risk entry point. You've got an initial move up, pullback, consolidation. We're looking for our pivot point. RMV helps us find our pivot point. And then we're looking to play that expansion upwards and managing risk initially at, the range lows. Then even as this works, we can use the breakout day low, the low of the day, and then obviously moving your stop to break even as a trade moves in your favor, forms another range, resumes upwards. Then you can move your stop to these lows right here and kind of trail your stock that way, or trail your stop that way, or use that 10 EMA once this gets above your cost. That's kind of the benefit of making these trades near the 10 EMA or 20 EMA is once that moving average gets above your cost basis, that can be your trailing stop and kind of keep you in for a longer term trade, while of course making sure that you're stopped out for a profit if the trade does pull back, as they always do. Tesla, I want to highlight, of course, the 2020 move was huge. And I want to highlight, just how well RMV would have helped you identify that particular opportunity. So going all the way back to 2020, looking at this base, we see expansion to the downside, tightening right below the moving averages. This is very common. We see RMV going to zero. Then we get one more pullback, then a move up, and then very subtly, very tight 2 days. And then as RMV goes to zero, what happens the next day? We see the start of expansion up. This would have been a great buy point. And in fact, Oliver Kell, who won the championship this year, this was his buy point in 2020. This is where he started his position that he further added to and traded around. But this buy point, this point, which RMV highlights for you, even if you know nothing about trading, is the same thing that the U.S. investing champion of that year was looking for and decided to act on. These tight areas, they move up, which coincides with the break through these highs. What do we do when we see RMV go to zero? We go ahead and draw through the pivot of the highs, which could either be this bar or this bar, but it's always helpful to see confluence where it lines up with a previous area of resistance, which makes this pivot point so strong. And then you can play the expansion up. We see further tightening, further opportunities for buy points against the 10 EMA. Might have gotten shaken out here, but just look at how RMV highlights this tightness multiple times going to zero. This overall is very, very tight. And what do we see? Expansion up, more tightness highlighted by RMV. Expansion up, more tightness highlighted by RMV. RMV going to zero right here. And then what do we do when RMV goes to zero? We go ahead and draw that pivot in. And this could be your buy point right here. And personally, I bought it right on this day. I didn't have RMV as my tool back then, but I bought it right here. And this was one of my best performers of the year, along with NEO, which was another really good VCP tight area example. So expansion upwards, we see tightening against the 10 EMA. This, is a little bit further along in the trend. We've already had multiple buy points identified by RMV and price tightness. But we have tightness again in here, breaks down a little bit, but RMV going to zero. So when RMV goes to zero, really start paying attention, because sometimes it works right away. Sometimes we get one more pullback and then it works, but it's just a sign to really start paying attention, because it really shows that the sellers are getting exhausted and we could have a powerful move upwards after that. So definitely, look back at previous case studies, previous stocks that you've traded, and see how RMV could have helped you identify those proper buy points, as well as accumulation within the base. And one more example I want to go through, because just to show how versatile this is and how much this is an element of market structure that works on all time frames, I want to highlight HOLO, which is not my type of trade, but I know intraday traders, day traders who focus on these type of momentum, high momentum names, they're looking for the same things: tight areas, expansions upwards, pullbacks into moving averages, and RMV can help you even on an intraday time frame. So let's actually go back to a 5-minute chart. We might have to scroll back pretty far here to get to that day, but we'll go ahead and do that. And RMV can basically help you highlight low risk opportunities on even high momentum names, just like this one. This is that high momentum day, which would have shown up on a scanner looking for huge volume at the open, or however you want to find these high flying names. There's many different ways, but what do we see here? We see price tightening, RMV going to zero right before the expansion up. Then we see it tighten again. What does RMV do? It goes right to zero right before further expansion up. Then we get a longer base. We see tightening range in here, RMV going to zero. What do we do when that occurs? We go ahead and draw across a pivot. And that can be a nice buy point as well. What happens at the end of the day? We see RMV go to zero again, gets very, very tight. And then the last two bars are another breakout expansion up. So it's the same thing on an intraday basis as it is on a daily chart, weekly chart. We're looking for a previous expansion up, tightening, ideally, right above moving averages. Then look to draw in the pivot that, RMV has helped you identify, and then play that expansion continuation up in a high potential name. So this, I think RMV is a great way to help you break down a chart, identify, both that a stock is under accumulation, as well as identify, as I mentioned, the low risk buy points that we've kind of shown a bunch of examples today about. So that's pretty much it when it comes to the indicator. But I do want to mention, how this can help your screening and routine process to help identify, areas like this in real time. So in DeepView, we have some presets created using RMV in screens that look for stocks with low RMV. And if you want to find those, let's go over to the screener. The drop-down menu is screener presets. What you want to do is go over to DeepView and go over here and scroll down. And we've got two main ones, power and tightening and tight range. I prefer the tight range one. I've also used this one. And let's go ahead and load that up. Take a look at the filters. We're looking basically for a high ADR name with a minimum of dollar volume, minimum of ADR. So basically looking for a high momentum name that, has very low RMV of under 10 currently. And there's some other criteria here, which you can take a look at your own leisure. And of course, just like any screen in DeepView, even though it's a preset, you can go ahead over in the menu. And if you would like to, you can click the three dots here, duplicate, and then you can basically edit it. You can make it your own, add criteria, subtract criteria, and basically make your own screen out of it. But just looking at this one in general, if we tab through here, we're seeing stocks that are showing these tight areas. We're starting to form ranges here. Let's go ahead and actually sort by RMV and get the tightest at the top. So all these have 0 RMV. So again, forming a tight range, especially the last 2 days. Tight range through these highs could be a pivot. A little bit of downside reversal, but still tightening here in general. So you just have to kind of also interpret it through your eyes to identify whether the tight area is at an actual spot or not. As I mentioned, I really prefer the ones that are at the bottom of the bases. You can see tight area the past 2 days here. I really getting tight here against a 20 EMA. GTS, really tight day, but there's a little bit extended here. This would have been another really good spot. You can see it gets tight, and sure enough, RMV pulling back sharply to 6.56. So this would have shown up on the screen at that point. And you also see a kind of more subtle buy point in here, which formed as this consolidation before another expansion upwards. HDV. So I haven't seen these stocks before, but they're showing up on the screen, forming tight areas currently on the right-hand side. HRI, great example, really nice tight range the past few days. And in DeepView, you can also use the mini charts to kind of help speed up this process and take a look at a lot all at once. So you can just kind of scroll through looking for tight areas on the right-hand side and just kind of highlight the ones that you want to add to a watch list and go ahead and do that, add it to whatever you would like. So yeah, that's pretty much it in terms of what I wanted to show today when it comes to RMV. Again, this is proprietary to DeepView. This is part of the reason that this is kind of the best platform for swing traders and position traders, is because this has the potential to help you interpret charts faster and easier, as well as screen for high potential names showing good, strong charts that much faster. So let me know down below in the comments if you have any questions. Highly recommend checking out DeepView, trying this out. Again, you can use code RMV for an additional 20% off. Highly recommend you check it out. We have, a vastly growing, quickly growing customer base that a lot of people are giving us great feedback, great ideas that we're working hard to implement very quickly. And we've got a lot under our belt that we've got planned in the coming months and years that we are excited to bring to life. Recently, we have the dashboard, which basically allows you to create your ideal trading layout here. You can basically add chart apps. You can add the screener app, deep list app, so you can kind of create your own, dashboard. Of course, we call it that. That is ideal for your style and what you're looking to do. We recently added the position sizing calculator, which allows you to quickly identify how many shares to buy based on a set risk. So you can create basically a dashboard to suit different needs. I've got a market monitor that I use to monitor ETFs and the overall indexes, my trade execution monitor, and then of course you can set up a screening or more specialized dashboard. But that's a piece of and a small view into the capabilities of DeepView. Again, highly recommend checking it out using the link down below in the description. Let me know if you have any questions about RMV down below. Thanks so much for watching. If you're watching up until this point, definitely check out DeepView if you haven't already. And I'll see you guys in future videos. Take care.